Hello, my name is Geert Theys and I'm head of Fintech at SmartDev. This is another installment in our thought leadership videos, and the topic of today will be financial inclusion in Asia. It's a topic very close to my heart because I've always wanted to work in finance, not just for people that are well off, but also to help people to better themselves in life. So let's first talk about exclusion. You have financial inclusion, but exclusion is the opposite of it. So what does it mean? Well, people who have no assets, no savings, no insurance, they don't have bank accounts, those people are excluded from the digital financial ecosystem that is out there. But what is more important, in my opinion, here is, first of all, people don't have access to affordable credit. To better people, it's always better to have access to credit so you can start the business and start gathering assets. And also another part is that people are illiterate how to manage money. They don't have good access to decent money advice. Now, in Asia, the growth for digital finance is a big goal. In Asia, digital finance is still a big opportunity. The growth for especially digital lending is a very big opportunity in Asia to give people access to loans. And the numbers, the studies, they prove that that is really the case. But what is actually the biggest problem here? The biggest problem is that cash is still king in Asia. In Asia, merchants, smaller business, SMEs, they all use cash. I can illustrate it. My partner is from Thailand and she always prefers to have cash in her wallet. She doesn't like her bank card, she doesn't like any other means of paying. While in Thailand it's very easy. They have the QR code system there, where all merchants, you can scan it and you can pay it, but still she prefers to have cash. This is more like a cultural thing. It's not about that she doesn't have access, but it's much more the culture that where she is used, she wants to have the cash in her hand. She wants to feel it. Many people will have this also because they're used to it, but secondly also because they don't have access to digital finance. So why am I focusing on this part? I have a big belief that access to affordable loans can help grow your economy and the GDP of a country. All those SMEs, all those people that maybe don't have access to regular employment, they can start a business. For example, in Thailand, where I lived a big part, you have a lot of street vendors. Thailand is famous for street food, and a lot of vendors, they go with a cart on the street and make food, and that's how they make a living. But to get the food cart, they need access to affordable credit. Yes, they have access to loan sharks with very high interest rates, but they should have access to the normal ecosystem, digital ecosystem. Now, what are the main constraints and barriers for people there? So what is finance? We think about payments, transfers, we think about savings, we think about credit, we think about insurance. So the entry here in the digital is with a lot of components that are necessary. The entry is KYC. First, the KYC, you need a national ID. In some countries, developing countries, not everybody has an ID or is registered or even has a residence. Another entry barrier is supply side. For example, in the Philippines, people are doing mobile banking and are in the digital finance world, but it's the last mile. Banks are not on the countryside. They cannot supply there, so that's also a difficulty. For example, in Africa, mobile penetration is not that high. Another barrier. These are all barriers of distance and access to it. Then of course, there has to be something on the market that provides the services to you. Somebody that does the digital payments, that does the savings, the credits, the insurance. Traditional banks don't always do this, but fintech companies, they try to fill the gaps in this one. And then lastly is regulatory oversight. Of course, customer protection is important. Dispute resolution, very, very important. And also what is happening with the data that is gathered. All these things have to be thought about by regulators and overseen by them to make sure that there is a good strategy to have inclusion also for these kind of people that are not currently into the ecosystem. In the end, what can we take away from this? There is work to need to be done to get all the people into the digital financial world. It will help them. Once you're digital, you do transactions. There can be a credit score done on certain merchants, and we can provide them credit to make the economy better. It's a very important task that we all have to work on for the future and try to remove all these barriers.